Hey there, Teresa Timms. Let's deep dive into the true cost of buyer programs in California. You know, if you call a lender out of the blue and tell them you want a buyer program and they pick one for you and tell you, okay, all you need is $5,000 and you start shopping and you're aware of the payment and you go get in escrow and you look at it and you're like, holy cow, I didn't know it was going to be this expensive. What we do at TDR Mortgage is we educate you on all facets of the programs, what the true costs are, what the down the road challenges may be. We want to educate you. We want to give you the most information and put you in the product that is best for you right now and best for you down the road. So let's get started. Let's take a look. We did this matrix for a client who is shopping for a home in a 550 sales price. FHA 3.5% down, 700 FICO. We did this July 5th. Let's take a look at the different options. What I want to highlight, we're not going to deep dive into the program guidelines. Buyer programs have certain restrictions. All of them work a little bit differently. FHA is a program with a low down payment, but it's very, very generous with debt ratios, very, very generous with credit. Calhfa is very restrictive with debt ratios and more restrictive with credit scores. The NADA program down here has less restrictions than Calhfa. You can go up to a 50 debt ratio. You do not have to be a first-time buyer. So they all have their different aspects. So what we want to do is just kind of educate the consumer when you're looking at one of these programs. Also take a look at what a regular loan would look like. A lot of people don't know. Look here, this FHA loan, FHA 5%, $42.90, principal, interest, taxes, and insurance. Funds needed to close, $20,000. Lender paid credit. In this 5% interest rate, we are giving a 2% closing cost credit, which is going to cover most of the closing cost. Probably the day we price this out, this rate, the true rate on FHA would have probably been like 4.5 or 4.625. We raise the rate to 5%. We can give closing cost credit. The seller can only pay $866 in this scenario because the buyer needs to come up with a minimum down payment, which is 3.5%. The total cost of this FHA loan is $20,000. Down the road, whenever we are in a recessionary time, the feds come in, save the day, lower the rates. This particular borrower that opted or was able to do the FHA loan, because not everybody has 20 grand, right? Maybe some people only have 10 grand. So we're gonna give you your options for that program. But the person that was able to pull off the FHA loan is going to qualify for an FHA Streamline product. So let's just say and again, no crystal ball here, but when the feds do reduce the rates, if they go into the low fours, high threes, low threes, this person is going to be able to enjoy the FHA Streamline refinance, where the regular documents needed for a loan is this much. On a Streamline, it's like this much. You don't need an appraisal. Very, very light doc program. That is the huge benefit to being able to pull off an FHA loan. Okay, next, Calhfa, California Housing and Finance Authority. We've been doing these tried and true programs since 1998. I love the Calhfa. It serves its purpose. However, it's very restrictive in a lot of areas. Debt ratios, you have to be a first-time buyer, which means you can't have owned a home in the last 3 years. You only need $8,300 cash to close. The seller can pay all of that. The seller can pay all of that. When you look at the total cost, however, you're getting a first mortgage. You need 3.5% down. You're getting a second and third to cover all of the other cost. This is going to leave you with silent second and a silent third that you have to pay back. You will not be able to enjoy the benefits of the Streamline because the additional second and thirds will not subordinate. And so FHA needs to have the loan free and clear. So you will not be able to Streamline. One thing I can tell you, if this is the only loan that you can do, it is something that I highly recommend. I wouldn't wait. I mean, unless you can come up with, the $10,000 another month or so, I often recommend that you do what you can at the time that you can do it, right? Do what you can, get into the house, leverage against rent, start, building your wealth through owning real estate. This program, this NADA program, is one of our lenders. You see, I'm what's called a loan broker. I place my clients with the lender that's offering the best rate and terms for my client's situation. When we approach a loan, we'll do what we did. We did 3 fee sheets to our clients. Full disclosure, take a look at what all the costs are. We're going to go into those fee sheets in just a little bit. But the NADA program is something where the debt ratios are a little bit higher. You don't have to be a first-time buyer. So sometimes, let me go back to this sheet. Sometimes this NADA program meets the need. Now look here, you need $23,000. So if you have $23,000, you're going to do this program, right? So it's like a puzzle. It's a total puzzle on trying to figure things out. However, all this 23,000, the seller can pay all of this. So here's something where, if this program fits, and it does work sometimes, we will recommend the client do this NADA program. In this situation, obviously the FHA is going to be the best fit. Now let's take a look at the fee sheets. Okay, I want to just kind of go over the fee sheets with you guys really fast. Kind of make this a little bit bigger. All right. 5%. Here's where we're giving the closing cost credit, right? And here's all the charges: title, escrow, appraisal fee, yada, yada, taxes and insurance. You come down here, we have, in this particular situation, we have a homeowners association dues. I totally forgot about that. So $42.90. Let me go back to well, I'm not going to worry about that right now. The purpose is not to be 100% accurate. This is not an offer to lend. It's just to expose you, to wrap your head around what the true costs of the loans are. So principal and interest. And then here you have $20,000. So let's take a look at the Calhfa one. Okay, Calhfa. Calhfa is a little bit different. See, in this one, you're not getting an $11,000 credit. We have to charge all of the fees up front. This is something called a borrower paid transaction. So there's no lender credits. Everything is up front. We're not getting paid by the lender. So all of this stuff has to be charged. So look at this. So you're paying 1.75 origination fee, underwriting fee, Calhfa bond fee, the second fees. Here's an HOA fee. So that's on the other one. So that's why when you look at what the cost is, your subordinate financing is $35,000. So when all's said and done, you're going to have to come in, if you ever refinance this Calhfa loan, you're going to have to pay off the second and third in order to refinance. Now, this doesn't have HOA on it, so it's $45.43. Okay. 6.75, $549 sales price. Okay, let's take a look at the NADA loan. It's going to be fairly similar to the FHA loan in that, the Calhfa loan, right? It's going to be kind of similar. You have your loan origination fee, processing, admin for the first mortgage, admin for the second mortgage. This particular loan has a second mortgage that's amortized over 10 years. When you look here in the payments, this is the second loan that you're repaying. This second loan here: hazard insurance, real estate taxes, mortgage insurance. So the total monthly payment is $46.01. So you can see how these greatly vary, right? It just depends on the buyer's particular situation. So if you're doing a first-time buyer program and your lender hasn't give you the different scenarios or your different options, so you can see it with your own eyes. Maybe they priced it out and they told you that it wasn't good for you or whatever, but ask them to do like a little matrix or send you what your options are. And also know that these rates change. So let's take a look at, we updated this for our client yesterday. Let me go grab that sheet. And rates went up a little bit. And so I pulled it. I'm like, what the heck is going on here? Okay. Now look. So now FHA is pricing out at 5.8 for us to give that $11,000 credit. Calhfa is 7.2, and this NADA is 7.94. So to me, if my buyer is wanting to get in with as little money as possible, we are going to ixnay on the NADA and recommend they go into the Calhfa as long as their debt ratios and all the other stuff pencils. Okay. All right, so that is just to kind of educate you on what the closing costs look like and what you need to look out for when you're looking to make sure, when you're looking at a buyer program. Are you in the product that is right for you? And this particular borrower had a bankruptcy. We can only look at FHA product. When somebody doesn't have that restriction, we can evaluate a 3% down conventional loan, a 3.5% FHA where we pay closing costs. And then whatever buyer program is performing the best, we'll go look at 3 or 4 programs, evaluate which ones are offering the best terms, and then present 1 or 2 options for the borrower. So if you're looking to buy, sell, or refinance, or want to take a look at getting into a house this year, pick up the phone and call or text to 909-920-3500. I would love to help you. I'd love to have a conversation. And we don't always need to run your credit and do like a full intake and have you get all the documents. Oftentimes we have people come to us that are, looking to purchase next year, and they want to kind of get an idea of what do they need to do. And especially to self-employed people, sometimes need a lot of help and looking, because they have write-offs and things like that. So please never think that you're bothering us or you have a silly question. That's what we're here for. We are a resource to help you become a homeowner. Thank you so much for listening. Like, comment below. I want to know what you're thinking, what your comments are, what your struggles have been, and we appreciate you. Have a beautiful day.